Gold has been considered a valuable and coveted metal for centuries. In this video, we will explore in depth why countries maintain large gold reserves. Gold reserves are important for countries because they provide a sense of security and stability. Central banks around the world hold gold reserves as a store of value, a hedge against inflation. Inflation can erode the purchasing power of a country's currency, and gold is considered to be a safe haven asset because it is not subject to the same risks as other assets like stocks and bonds. The value of gold can be volatile, but it tends to hold its value over the long term. This is why gold is often used as a benchmark for currency and as a standard for international trade. Countries with large gold reserves are seen as having strong economies and stable currencies. Gold reserves can also be used as a tool for international negotiations and as a symbol of power and influence. Countries with large gold reserves are often seen as more influential and powerful on the world stage. For example, during the Cold War, the United States and the Soviet Union both built up their gold reserves as a way to demonstrate their economic and military strength. The mining and production of gold can also create jobs and stimulate economic growth. The sale of gold jewelry and other products can contribute to a country's economic development. Countries maintain large gold reserves for various reasons. Some countries, such as the United States, Germany, and Italy, have historically maintained large gold reserves as a way to back their currencies and provide confidence to investors. Other countries, such as China and Russia, have been actively increasing their gold reserves as a way to diversify their foreign exchange reserves and reduce their dependence on the US dollar. Gold reserves can also play a role in a country's domestic economy. They can be used to pay debts, meet financial obligations, and stabilize the currency during times of crisis. However, maintaining large gold reserves also carries risks, such as the possibility of theft or loss, and the potential for fluctuations in the value of gold. In addition to central banks, other entities such as governments and individuals also hold gold as a form of investment. For example, during times of economic uncertainty, investors often flock to gold as a safe haven asset. Gold is also used extensively in the jewelry industry, and some countries, such as India and China, have a strong cultural tradition of buying and holding gold as a form of savings. However, the importance of gold reserves can vary over time. For example, during the 20th century, the Bretton Woods system of fixed exchange rates linked the value of the US dollar to gold. This led to a period of strong demand for gold as countries accumulated reserves to back their currencies. However, the system ultimately collapsed in 1971 when the US government ended convertibility of the dollar into gold. In conclusion, countries maintain large gold reserves as a way to provide security, stability, and influence. Gold is a valuable asset that can serve as a store of value and a symbol